Good afternoon. We're going to take the time to go over some bear funds with our new traders. We have a list of bear funds that have been out of favor for the last couple, 2 or 3 years. This is the very cheap side of the market. We're going to go through a few of them. The QID today was up $1.24. The TWM. Now these are a list of bear funds that back when we had big corrections that they work. And we're going to take a look at some of them. So the first one we're going to look at here is the QQQ short, QID. That's a bear, and the reason why we're calling that is because when I blow up this part of the chart on that particular bear, and the bear is back, let me tell you, and there's a lot of upside. There's a major consolidation down here. These things have been beaten down. The last high was $64. We're down here consolidating. That is a QID, and that's called the ProShares Ultra Trust Short that is going to pay. We're going to have a 10% pullback. Then a longer term pullback is going to be about 50%. That will take between 6, 12, and 18 months. And yes, these bears are at their very bottom. And we have major correction coming on all of these indexes. The S&P 500 and the Dow are going to catch up to the NASDAQ 100, the NASDAQ Composite, and I'm telling you that that bigger side of the correction is here. And that the volatility, once again, is going to get extremely higher. So as we look through our bears, and that's what we're going to do. We're going to take this TWM and we're going to put it here so that we can see what that's all about. And this is the Russell 2000. We are in this bear, and I will tell you why. The Russell 2000 bear is where those small caps had performed in this great rally that we had. And then the bear where we were buying these down here at around $44 are now up here at a resistance level. But every time they've been pulling back, that Russell 2000 is going straight up in value. So it's time to get on those bears, Russell 2000 bear. It's been a while, but we had to buy these bears when we were hitting all-time highs. We know the markets are coming down 10% in the short term, but we do know over a longer time frame, we're going to have up to a 50% correction. A lot of it's going to have to do with the Federal Reserve. This is a special update on our bears that we own. It's a 3X bear. It's an HSETF. What does that mean? Well, here. There is the value, the bid and ask. It's very cheap. It's a 3X bear, and you can see all the prints. They're still buying them. We own them. 27 million shares. Here, let's make sure this is in the video. 27 million shares traded on that particular bear. We're simply going to show you that we already own it, and I showed you the chart. Here is the chart. Once again, I'm going to blow it back up. Now, here's that chart again on the SHS 3X bear. Okay? We own it, and you should too. Now, we have a much longer time horizon because we're just not going to go straight down in these markets. We'll have our first 10%. There'll be times to take profits, but these things are building higher levels and higher support levels within their trading range in that particular bear. Here we have another EDZ. That's the 3X daily market, HSS ETF. It's right there. It's coming down. It's putting its lows in. We can see where those highs were. We can see that over the longer term, we're buying these bear funds. Here we have the small cap 600 bear. That bear has been setting up that bottom because the small caps have come down. They're going to even go lower. Now, we're going to go lower over time. 2013, I put a great floor underneath there for that bull. However, it's time to start buying these. We have a long time horizon on this. And over time, as we go through the summer and we go into the latter part into fall of 14 and going into 15, these are the places. This is the cheapest side of the market. All of the indexes, I said, over time, they're going to have a great deal of difficulty as far as the easy money over 60 months. We've had a great bull run, and that 60-month cycle is over. And individual bears are going to start to set up great plays. We already own them, and it's for you to figure out. But my MMT, Small Cap 600, when we're showing the SDS S&P 500 bear, well, this thing here was up here around $33. And with the bull, look, the bull had its bull moves, and we're accumulating these bears. And we have a long time horizon on these things. We have a major market top in play right now. And as we go through the next year, and there's going to be time series elements, 3 months, 6 months, 9 in the calendar of 12, and the yearly outlook, and everything that you would want to know. So this is a great one right here, that SDS. That is a bear fund relative to the S&P. A great one to get involved in if you have the long-term horizon. Like, we are buying this low market here. We've already made our upside. We cannot lose money by going down here and buying these bears for the longer time frame moving forward. Between now and the summer, there'll be up moves and down moves. Nothing goes straight up, but nothing goes straight down. That S&P 500 bear fund is consolidating as the S&P gets ready to roll down. Here we have that. We're going to recap RWM, which had put it in that bottom relative to what? The short, the Russell 2000, period. That's what it is. ProShares, Russell 2000. It's been building the base. Hey, listen, we made our money. It's time to buy these dips. We own it, but we own it for a long time. Why? Because we're making money on the bull side, but we're also buying this bear. We can't lose. This is where the trade is over next 3, 6, 9, 12 months out. 10% correction. Then there's going to be another bigger correction as we move through the time series cycles of what happened with these markets. One of the things that has performed very well for us is the TLT, iShares 20-year plus ETF. And it's rallied all the way up, hit bull flags all the way up. There it is. It's top heavy right now, but any great pullbacks back down into here. And we've been selling things into this, but it's been a great performer. Here we have the Dow Jones bear. Look at that. We rallied up. It was time to get out. Remember, bear and bull scraps are what they are. I will tell you, though, that selling at the highs and getting out when that bull, look, when the market's ready to sell down using your fear indicators, MMTs, all the tools that you're taught to use, this is the place. This is the daily breakout. It's got a lot of room to go higher. We can't lose money. We're on the other side of this trade, and we're very well diversified once again. What we can say to you wholeheartedly, stockmarketfunding.com. That's where you need to go. Get the free trial, open an account. We will give you leverage. We will give you buying power. We will give you daily everything that you need to power your trading business. Come here, go through the content, get together with us. So basically, here is that Dow Jones 30, which when the Dow falls, the Dow's got another 10% below it over time. And after it does that, well then, you know, you're going to have to adjust both the bear and the bull trade. So we're selling up here when the Dow went down. Do not take your eye off of the PHS there. That's Dow 30. It's a new one, but it's a big pair as well. Once again, this is one of the best trades that we had over the years. It's called the SKF. It's an ultra short financial. And when I say back in the day, this thing back in 09, hey, these things traded up to 1,000. I mean, look at that 2009 up there. Well, I tell you what, financials have done a lot better. This was the greatest place ever to have made just bucket loads of money After that 6-year expansion, well, here's the deal. The financials have done extremely well. And those years were a totally different time than what we're in. What I do want to make sure that you understand what the financials are going to do. We've already made money on the bull financial. Now we're looking at where this particular one is going to set up that bottom base. And if there's any trouble in the financials, well, we'll be adding more shares. We also have, and we've been talking about this forever, the GDX, the gold miners. It's an ETF. It has a range and whatnot. What we can say for sure, look, we put it back, look at it. This thing used to move parabolic up, but now that everything has happened differently and whatnot, listen, here's the bottom base. 13 was a year that went down. We made that bottom, and this thing rocketed straight up, put the high. It's back in play. GDX gold miners, that's the place to be. Here we have the SPXU. And yes, it's setting up a bottom base right now. And long term. And the days that these want to come down, we trade the bull. And the days that these want to set up, we sell the bull. And we rotate back and forth between both the bull and the bear. But there is a lot of upside, I'm telling you right now. Let's make sure you understand that our new MMTs, our staff that we have around the world, all of our great foreign partners and traders that are set up with us, that is the one to keep an eye on. It's SPXU. It's set up a bottom here, and it's consolidating, and it was up here at $70. There's a lot of upside moving forward here and now in these bear funds. Well, the last thing that I'm going to show you now is I'm just simply going to throw the Dow Jones here. That Dow is breaking below its 50-day. And those bear funds are related to this. They pay big. Not only that, let us not forget to the NASDAQ 100. This thing I've already covered today. Go look at the live videos. NASDAQ Composite, they're all going to come down. NASDAQ Composite has already put in a huge reversal. A huge reversal. And that, guess what? Say goodbye. Say goodbye to 2013. Say goodbye. Now, that is, once again, the NASDAQ Composite that was up here, and you can clearly see the value of it. So let's make sure the video is right up here. Here was the top. We called that. 43.75. Right there. Bam. We rallied up. We filled. We consolidate. Bear funds. Bear funds. Bear funds. S&P 500's been in a chop shop. It's up. It's down. This was the lows. We can see that. Time to get those bear funds in that S&P. Anyway, we're going to conclude our bear update, the indexes, the things that we've been doing, been buying puts, been buying bears, been trading the bull call, diversifying the trade management, giving you trading capital, and once again, guys and girls, it's all right here. Free trial, come and get with us. Hey, listen, all of the analysis, everything is done here. Go through it. It's all before the fact. Type in the search box, hit go, open an account. You will be taken care of here. Once again, it's our pleasure to have updated all of our traders around the world and in the U.S. and how them bulls and those bears are reacting. There's a 10% correction. It'll be more than that. First it'll hit that and we'll rally up. But over the long term, the very long term, we're looking at a total 50% that could take us out from here into 15, into 2016. And it's going to be 6, 12, 18, and 24. Throw on that 36 month. We have reached the great thing. The stimuluses, they've all played it. The Fed is going to be doing this and that. The cheap money is going to go away. The whole thing that the yield curve, where these things are at, There's a warning sign, a lot of other warning signs in lots of places in these markets right now. The bull was great. We loved the last 5 years. We just loved it. Okay? But now we had to short all those big stocks. And we did. Every one of them. And we told you that people would get stuck up there in those highs. And the big high flyers in the NASDAQ Composite, NASDAQ 100, they had huge corrections, over $100. And a lot of those stocks fell. And we notified everyone last year it was going to happen. And we also told you if you owned it, you had to come out. Because if you didn't, well, you would have the house of pain for who knows what, how long.